Okay, everybody, here we go. It's me, Gregory Mannarino. Still Tuesday, November 12th, 2024. Lots of stuff to talk about. Um, I almost don't know where to start. Oh, how about this? So it looks like the market doesn't go straight up every single day. Now, you and I have covered, in fact, just this morning and yesterday, a lot of you wrote to me saying, Greg, I missed the boat. You didn't miss nothing. All right. But we do have to consider other things. Look, man, you're in this market because there's risk. If you're looking for something that has no risk, you shouldn't be touching anything here. Nothing at all. Okay. Well, no. Okay. Let me say this. If you're looking for what I sincerely believe, beyond any shadow of any doubt, that is going to pay off massively in the future, that is obviously going to be commodities, gold, silver, platinum, palladium, and crude oil, which we're going to talk about a little bit here. But with regard to this market, okay, there are issues, and we're going to talk about that. And some of this may present an incredible opportunity, but you got to weigh risk, man. Risk, reward, maybe a few other little things that we're going to cover here as well. This is not an easy game that we're playing here. There are so many moving parts, and things are moving around quite a lot. Now, this market, the banks, cryptocurrencies have been absolutely freaking euphoric, more so, maybe like orgasmic, since Trump's selection here. I'm going to connect a few dots for you to kind of show you this really was a selection. Of course, you already know that. All right, there was no election. You knew that before. The market got the guy that it wants. Period. The freaking end. Where's wealth going? Up, 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 up. Not going to you. No, it's not going to you. It's going up and up and up and up. Anyway, that's just, you knew that was going to happen here. But the fact of the matter is, there's going to be some profit taking here. Now, that depends on a few things. Let's talk about that. This is the 10-year yield as of right now, 4.435. This is not pretty. It's not pretty for a few reasons, which I want to go back to. So just hold that thought. Why we have a problem here, but I want to show you something real quick. This is the MMRI. This is not good. This is not good at all. We've been watching this for quite a while, you and me, but I want you to see something else. I don't know, a week ago, I guess this was, I made a projection as to how this would play out moving forward. And I want you to see that. Here is my projection. Now, you see that little question mark area? That's kind of where we're at now. Now, I want you also to consider what I'm about to say. When I made this projection of how I believe this is going to play out, that's based on dynamics that move around, okay? Let me explain this to you in a different kind of a way, maybe. All right. For those of you out here, I really want to set the record straight. We're in an economic free fall. We're pretty much square, right? You and me with regard to that. And this is not just a phenomenon here in the United States. This is a deliberate act by central banks who will continue to inflate the global debt as a mechanism here to destroy the purchasing power of their currency, force the people to suffer. And it's an economic wrecking ball. You all know that. Suppressed rates, artificially suppressed rates. You were promised this during the campaign, which means currency purchasing power destruction is not what you need. But you of course, people just, they're not told this stuff. So how are they supposed to understand it? A candidate, a puppet, they could say anything and they know they can get away with it because people have no idea what it means. It sounds good on paper. When you say to someone, hey, you know what? I promise that I'm going to make it easy for you to borrow and borrow and borrow and borrow some more. People are already maxed out. We already know that. Loan defaults skyrocketing across the board. But it sounds good to say it. And, Trump promised, way lower rates. Quote, look it up for yourself. And, of course, that means the Fed, doesn't have that power. You see, he can't tell you that either. Imagine, for example, when when Kamala and Trump were, they were in this war between each other, and they were both promising you the same thing. Imagine if either one of them had the guts to tell you the truth. If they said, you know what, I'm going to promise you lower rates, but I don't have the power to do it. That's how stupid they think you are. I think it's an insult. I personally think it's an insult to hear gibberish, garbage, vomit come out of their mouths that they know to be true. Of course, they can work with a central bank and make that happen. Nothing would make a central banker happier than to have some puppet behind the Resolute that's saying, hey, you know what? I promised these people lower rates. Let's make it happen. Yeah, man. Yeah, we're ready. Of course, to fulfill the Federal Reserve's end game here. The Fed ain't going nowhere. Okay, just so you know, the Fed is going to be so much more powerful in 4 years from today than we are, if we even make it that far. As the new system, again, is they're already laying the groundwork here. Crypto capital of the world, you know all this stuff. We're not going to go there. But again, this is a problem. And my projection here, again, is based on the current dynamics in play. Now, I want you to bear with me for a moment here. I'm going to discuss something that it's not complicated, but maybe something you haven't heard before. This is the current U.S. 10-year yield, 4.43. This is Market Watch. The Market Watch, look what I wrote underneath here. I write notes to myself. 10-year yield breaks through key resistance on its way to 5%. Now, what does that mean? What does it mean? First of all, this would be very negative for the stock market. If you just saw this, nothing major at all, but a little bit. Okay. There's going to be, again, I would assume, maybe soon, depending on what the 10-year yield does, some profit taking. And you know something about the market that most people don't. Bear with me on this one. The market must constantly be reassured. The market has been in an absolute state of euphoria as of late. Massive inflows of cash into the stock market, into the cryptocurrency space. It's coming out of gold and silver, as we know that. You know the dynamics in play here. It remains risk on. Here's the key. Are you ready for the key? It remains risk on as long as the illusion remains real. Now, this is important here. I want you to bear with me on this. 10-year yield 4.43. This is the current federal funds rate. Now, it's between 4.5 and 4.75. It can move around, the federal funds rate. Now, you probably don't know, maybe some of you do. When you have an issue, like for example, let's say the 10-year yield hits 4.5, 4.75. You have an on par 10-year yield with the federal funds rate. That's a big red flag. It's a big red flag to the market, okay, that economic trouble is coming. You understand? So understanding that we're very close right now, 4.43, this is the federal funds rate. You see what I'm talking about here? This is very bad. So either a couple of things have to happen here. The Fed's going to have to get into the market, buy more debt, push the 10-year yield lower to not allow it to hit par with the federal funds rate. You understand? We on the same page? An old school tie. Yes, it is. Anyway, are we on the same page with this? You're with me so far? So, if in fact, again, and I want you to see this, there was a big question mark to me as to where we're going in the shorter run. When I was trying to come up with the most likely scenario here, yo, mammy, thank you. Smoke and mirrors, exactly. You're 100% right. So this kind of fits in to that spot there. This is today. All right. Look at this. I don't want you to overly focus on the number. Okay. The number is somewhat important, but it's how fast we're getting there. We're getting there pretty fast. So where we are today really falls right into this question mark that I wrote here. You see that? And this kind of extends this question mark here. I don't know if you can see how I dated this. You probably can't. So the question mark where we are now is right up into around the inauguration. Okay. Then we're going to see. So you could expect some turbulence here. I sincerely believe, people, look, I could be wrong on this, but I always try to give you guys and girls my absolute best take on what's happening so we can take advantage of it. I am never going to be right 100% of the time. We're probably right about 95% of the time. Now, I believe this. Central banks are not done. They're going to continue to inflate. They have all the cards are there, all the parts are there to make this happen. We now have a pro-negative rate guide to sit behind the resolute desk. Again, massively economically destructive, great for the stock market. The most likely scenario, going back to this, now this is not a lock. I want you to think. The most likely scenario, in my opinion, okay, believe me, if you and me are paying attention to this dynamic, this is a dynamic we need to pay attention to. Don't you think that the Federal Reserve is also paying attention to what's happening here? Of course they are. Boots, thank you so much. So this is really, really important. I will be watching this, and so will you. And I can. This is what we can expect. I mean, in the short run, let's say the 10-year yield continues to rise. The market isn't going to like it, and you should expect to see some profit taking. And in my opinion here, people, this is an opportunity here. Euphoria. Everyone's all giddy. Let me pull some profit. Out of the stock market. And then again, it falls, it finds a new floor. Now, in the event, okay, that, where was that? Is that we do get a 5%. Where was that? Hold on, here we go. Here. This is someone here, this guy, presenting a 5%. This would be obviously higher than the federal funds rate. The market's going to see this as a massive negative. Now, understand, the Federal Reserve since June has been involved in yield curve control. We've heard this term before. The Federal Reserve, by manipulating the yield curve, can create an illusion that things are going to be good moving forward. First of all, they are not. The global economy is crumbling around us. Whatever Trump promised you about stronger economy, we're going to bring jobs back, it's not true. We have passed the point of no return. We are in a maximum saturation moment. What did we just find out the week leading up to the selection here? Business activity continues to contract. Manufacturing, factory activity, factory orders don't exist anymore. Bring all the manufacturing back that Trump has promised to do. This won't matter. There's no orders. The guys will be sitting there twiddling their freaking thumbs. You understand? There's so many moving parts to what's happening. Now, there's another moving part here, and I want to connect the dots here with you just a little bit. So far, but before I move forward, are you guys okay? You understand this? I'll take a few questions here before I move forward. Is everyone okay with? You understand the federal funds rate, the 10-year yield? You okay with that? I hope you are. Are you? In my projection, we're in this zone. We're in the question mark zone right now. We'll see where it goes. Now, let me just say this too. How many of you know? Maybe you don't know. Maybe you do know. Right now, U.S. oil producers are, I know you've probably heard the contrary, but look this up for yourself. Never take anyone's word for anything here. U.S. oil producers today are running the pumps they're maxed out. They're running them as fast as they possibly can. Okay. Now, with that, we have another element that we need to consider. We have seen commodities take a hit as of late. Crude oil remains the lifeblood of the system. I know drill, baby, drill, baby, drill. I know all about that. Okay. Here's a truth that maybe is a little bit inconvenient here. When it comes to this stuff, let's just throw out a hypothetical. Okay, here's a hypothetical here. Drill, baby, drill. We get a whole bunch of new wells and whatever the freak is going on. How do you think OPEC is going to react to that? You think they're going to keep pumping? No, of course they're going to offset the supply. They want crude fixed at a certain price, and they don't like where it is right now. So let's connect a couple of dots. Okay, if you remember before the presidential election, it was an election, right? This was how they were setting it up. Iran was being made the bad guy one more time. True or not, they were flashing this headline before you. Okay, Iran denies involvement in Trump assassination plot. Okay, just again, before the selection, Israel Netanyahu acknowledges pager attacks, say he sees eye to eye with Trump on Iran. Trump just happened to be the guy that was selected. So you can see what's going on here. We are going to see more war, more funding for war in the Middle East here. Just happens to be that we found this out. Trump picks an Iran critic, hawkish Israel supporter, this dude here. Okay. What did I write? Remarkable, isn't it? Remarkable. The timeline here is just crazy. Set the people up for the selection. We know where it's going here. Let's make Iran good or bad or indifferent. Make them the bad guys so we can start to set the groundwork. Get the guy behind the Resolute desk, and here you go. You understand? Again, in no way, shape, or form was this an election. You think I'm wrong? How do you see the market reacting? How do you see the banks reacting? How do you see the crypto space reacting? Oh, how is it working out for you? Not going to. It's not going to. You can expect to see more war and higher energy prices. It's coming. And with regard to the economy, again, look, man, here's a sign from the debt market. Like I said, when these par, it's a very bad sign for the economy. Now, what does that mean? Let's think. If the economy is going to dramatically slow moving forward, which it is, and there ain't no way out of it, again, we're being deconstructed. This is central banks. They run the economy. Again, you've been lied to over and over. Again, you were lied to. And how does it make you feel knowing that you were promised lower rates, okay? Much lower out of Trump's mouth. He has no power to do it. None at all. He doesn't have a printing press. He can't buy the debt and keep rates suppressed. So you were lied to. Did you hold him to account or did you clap for it like you were supposed to do, like a monkey? Ding, 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 the little monkey with the cymbals. That's what they counted on because they all think you're stupid. I know you're not stupid. This is why I get so angry and why I get bent out of shape. It's astonishing to me. I was watching some of the Kamala rallies and some of the Trump rallies and the lies and the deceptions and the people, bing, 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 bing. You can't make it up. Can't make it up. You and I must understand where we're going. We're already in an economic downturn globally of economic downturns. It can't be fixed. It's all because of the debt saturation moment that we are in. Now, let me let you in on another little piece of information here that I really hope you're paying attention to this. Okay, it's not going to come as a surprise to you or anywhere else, anybody here. The system is bankrupt. We already know that. It's absolutely bankrupt. It only functions in a perpetual vacuum, a black hole that can never be filled. Now, I want you to understand something here. War, there's going to be more war. No doubt about it. Yes, that is a mechanism to borrow, to pull more cash into the now. Again, we don't have it. We have no cash. We're broke. We're destitute here in the United States. The biggest debtor nation in the history of the world. with the largest debtor population in the history of the world. That's the truth. You're not supposed to know that. Well, Trump's not going to tell you that. He's going to tell you that we're all rich, but he's going to refer to his 1% and 2% of friends like Elon Musk. You see how rich he's becoming right now? You're watching Tesla. You didn't see that one coming, did you? Anyway, man. It's always the same. It's not going to stop. But here's what this boils down to. The mechanism here of the black hole that we're in needs another avenue, another excuse to push a lot more cash into the system. Otherwise, we turn into Mad Max. Overnight, you do realize that. I mean, let's just go back. Let's just go back here. We're in a full-blown liquidity crisis. I think we're pretty much all on the same page. There is going to be a point here when we do, in fact, get a massive, uncontrolled sell-off. Right now, this is euphoria. The market, everything getting shrugged off. And the worse the economic news is, well, the higher the market's going to go. It's all hinges on this. This is eventually going to go off here. It's going to go beyond the page. Are we going to get there before the inauguration? Nothing would surprise me. Nothing at all, because something else must occur to push more cash into to pull it into the system, whether it's going to be war, another scandemic. I don't know what it's going to be. But right now, liquidity is drying up. And you can see this reflected in the debt market, people. Again, going back to my projection, this is where we are in the question mark zone. This is a few days ago. And I think this is going to persist. This question mark zone we don't know where we're going to go. I don't know where we're going to go in the shorter run, I'm being honest with you. My projection longer term is because the economy is going to be cratering even more. What does that mean? Do you see where I'm going with this? More easy money, more debt, more currency devaluation. Let me explain this to you. There's so many different ways to look at this. Markets generally go through cycles, booms and busts, and booms and busts, and booms and busts. It's not allowed to happen anymore. We go up, 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 up. That's what happens here. So what does that mean? If we know that a normal market has an oscillation to it, okay, it's an upward, trend, but it goes kind of up and down, a random walk with an upward drift here. You see what I'm talking? It's not really random. I mean, there are patterns in it. It's not all random, but we're not allowed to have a market that corrects anymore, that drops anymore, even though the economy around the world is being wiped out. Are we on the same page here? So these oscillations are a normal function of the market. We're not allowed to oscillate anymore. It's always more cash into the market, more cash into the market. 52 record highs this year alone so far with regard to the S&P 500 on the back of an economy that's falling through the freaking floor. Yes, you remember a time when the stock market went down? It was normal to have 5, 10, 15, 20% drops. People have been so conditioned now to just say, oh, the market's higher. The market's higher. It's not normal. What you're witnessing here is not normal. So what I'm leading to here, and this should make sense to you, if we are in this extreme upward cycle here, 52 record highs, don't you think eventually we're going to come down, and we're going to come down dramatically? Lots of profit taking. Of course, that's going to occur. And this could lead to, again, it depends on the debt market. And I promise, look, all of you, I understand what I'm talking about, kind of convoluted, kind of maybe hard to follow. But there's going to be a time when this makes a difference. Right now, with all the euphoria, again, the market is drunk on Trump juice. It's swallowing Trump juice like there's no tomorrow. And you've seen the effect of the Trump juice. Markets, banks, crypto, cash coming out of commodities, including crude oil. This is not going to be allowed to happen. Again, crude oil remains the lifeblood of the system. Trump could pump and do whatever he freaking wants to. OPEC really has the upper hand here. And let me see. Iran, OPEC, Iran, BRICS. You're seeing a connection here. course you are. Let me ask you guys and girls. If you follow this timeline here, do you realize you were being set up? This was obviously before the selection. Before the selection. And then we get that. You realize that this was a setup, right? Okay. I hope you really do. We'll see, Charles. You know what? I think I'm on the same page as you with this. I really do. I really do believe that the Fed's going to get in this. So Charles wrote here, and thank you, by the way, that the Fed to the rescue soon. And that would be following my projection with regard to the here. This would be Fed to the rescue. Look, man, I'm giving you my best take on all this. I think we're on the same page. But we're not going to stop. Look, all you have to realize is soon. It has to happen this way. There's going to be, oh my goodness. Bitcoin just hit. Can you see that? 90 grand. Just popped up. 90 grand. Lovely, huh? Imagine our shock. No one saw this coming, except those of you that keep telling me Bitcoin's going to zero. Look, man, I don't want to make fun of anybody, but it's really a shame that people have missed out and they continue to miss out. I understand that people, look, if you are not taking some risk here, then I don't know, you have to. In life, you must take risk, especially in this environment when we're being systematically wiped out. This is a global phenomenon here. No, it's not an old one. This is a new one just from today. Yes, we broke 90. We came down and we just hit 90 again. So it's not an old one. Anyway, with that said, people, look, man, expect something. Expect anything. Jim, thank you. Dude, I'm absolutely certain that that's true. There are certain people that have the ability to maybe see a little further down the road. I really believe that's you and me. You and me have been so far ahead of the curve on all of this. It's frankly unbelievable. It really is. And look, we're no smarter than anybody else. It's really the truth. But just putting, look, I connect the dots. I'm a connect the dot kind of guy. That's really what I do. And I just connected the dots for you. Iran is a target. Trump is going to be supplying more cash to Israel to bomb the living hell out of the Middle East. And of course, Iran is the target. They're the ones that were trying to kill Trump, right? Of course. Net and Loco and Trump, they see eye to eye. You just saw the headline, right? Trump picks this guy. Do you see the writing on the wall? Maybe there's going to be a terrorist attack. They're going to point fingers like they did last time. Iran. It's Iran, everyone. Get your American flags out. Stick them outside. We just lost 4,000 people, maybe 5,000. Okay, so now let's kill them all. Let's kill them all. And tell me again. Tell Greg one more time. Where do we get the cash that we send for this war, for that war, for more war, to build up the military? Where did Trump get all that cash from? To build the military. That was his job during his last tenure, to build up the war machine. Well, we have to borrow it. We don't got it. Understand? Anyway, people, we're kind of really we're on the same page here. So again, expect a few things to happen here. It's a no-brainer. It's all lining up. Everything is there, and it's too simple to see. My only, and I'm going to be honest with you, with regard to the 10-year yield here, are we going to reach par with the federal funds rate? I'm going to tell you right now. If that does happen, and we're damn close to it, that's right now. The market is going to hate it. The market could potentially throw a tantrum here because, again, it's an illusion. That illusion of the market is a very powerful thing. And all this cash that just made its way in, you could see a lot of profit taking here. And again, if that does happen, let's set up a scenario here for my stock market lions. Okay. Let's say, for example, you get a par, 10-year yield, federal funds rate, market hates it. We finally get a pullback. Doesn't happen anymore, but maybe we will. The market falls. Imagine 5%, imagine 10, 15, imagine that. What would you do if that were happening and you started to see the 10-year yield drop? Well, I think you would pounce, wouldn't you? Because that's what I would do. Lawrence Q, thank you. Greg, you hit hard to the U.S. Census question. After making out of Bitcoin after the investors, so what would you think? Look, man, after making profit out of Bitcoin, don't sell your Bitcoin here, okay? There's going to be a time to sell your cryptocurrencies, people. There's no doubt about it. It's not now. It's not. Look, this hasn't even begun yet. With the crypto president, the Bitcoin president here, promising to put 5% of the budget into cryptos here, it's huge. I mean, it's huge. So I personally would like to see gold added. I don't even know if we have any gold anymore. Would it surprise you to find out that we have no gold? It wouldn't surprise me at all. It's unfortunate, but I don't know. There's been no real audit here. I think during Trump's tenure, and I could be wrong on this, his last time, apparently someone was sent to Fort Knox, and they said, "Oh, don't worry, all the gold is there." Where are the pictures? Because I want to see that. Show me the money. Show it to me, because I don't. Look, man. They sold it on Amex. That's awesome. Anyway, guys and girls, look, we covered a lot of stuff here, and I really hope that you guys and girls are getting some out of these videos. I really, really do. I think you are. So let me know what you think, where we're at here. Let me ask you one more thing before we go. All right. With regard to U.S. oil producers, we've heard a lot about drill, baby, drill, and everything else. Do you feel comfortable? I want to leave you with this, and I want you to think about what I'm about to say. Energy right now, record high profits, CEOs, multi-million-dollar bonuses here. The American oil producers here. Do you feel comfortable still subsidizing U.S. oil producers? Oh, you didn't know that we do that. Yes, as a matter of fact, to the tune of about $20 billion per year, you're paying for it. So let's put this together. U.S. oil producers here, record profits, multi-million-dollar bonuses. You're subsidizing it. Does that hit you the wrong way? Because I'm going to tell you the truth. It hits me the wrong way. I don't like it. I do not think that we, the people, because we run the government, right? We're the ones. We, the people, should be bankrolling to the tune. Don't take my word for what I'm saying. Open up a search engine right now. Is Greg right? Are we subsidizing oil to the tune of about $20 billion per year? I'm going to save you a little bit of work, unless you want to verify what I just said. Yeah, it's happening. And I don't like it. Do you like it? You didn't know about that, did you, right? Did Trump tell you that? No, he didn't, I bet. No, he didn't. I wonder why. All right, guys and girls, man. We're kind of going to end this. I love all you guys so much. I really, really do. And yes, Joe, I'm sick of it too. Joe Potter, I am sick of it. Joe, I am so sick of this whole thing. You have no freaking idea. It's but again, as sick and twisted as this is, man, we still must play the game. Otherwise, we're really, really done here. And I understand if you don't want to be a part of the stock market. I understand if you don't want to be more so a part of the crypto market here, even though we're seeing all this crazy action here. And I think it's going much, much higher. You have to be at least stacking gold more. You know what? Forget gold. I love gold. I own gold. But you need silver in your portfolio here. There was no doubt in my mind at all, and I mean this much, that we are going to get a 1-to-1 par Dow gold. I don't know how many of the people are talking about it. I don't know where the bottom is. All I do know is we have a market that is, It's not a market. There's nothing here. And it's going to get worse. Do you think since the euphoria in the market, which we've watched history being made, never before in the history of a presidential selection have we seen the stock market take off like this before? Does that tell you something that the market got their guy? Yeah, of course it did. The 1 and 2 percenters, the elite, the ones that we're supposed to hate, the banks. They're loving this, man. It's always a game, man. It's a game of lies. And it's an incredible thing to see. It's an incredible thing to see, unfortunately. But we're kind of there. We know what we're doing, and we know why we're doing it, people. Honestly, I don't know another way to put it. All right. Anything else before you guys and girls want to get out of here? Look, with regard to crude oil, for my crude oil investors out here, longer term, you need exposure here. However, you're getting some exposure here, and energy producers, or via the actual asset here. I personally think it probably would be better in this kind of a situation if you were looking for an exchange traded fund, which gives you direct access to a broad basket of energy. Energy is going up. I know you were told the tale. The tale was false. Understanding that the Middle East is going to be lit up. Iran again being targeted. Netanyahu, Trump, same page. The assassination attempt. Iran. You see the setup here? It's all a game. And the game is what it is, man. But I think and I believe sincerely that we know how to play it. All right. Why big big bars here? I wouldn't. I personally think you should buy smaller denomination if you're talking about precious metals here. I'm reading from Scott. I don't know if this here. I wouldn't be buying any big bars, man. I'd be buying smaller denominations. Honestly, I think that's the best way to go with assets here. Anyway, MMRI 300. You're right. It is a critical level. We'll see where that goes. And that plays right into what we're talking about here. And I want you to see this again, people. Look, if you take something away from today's video, I want it to be this. Okay, this is the current federal funds rate. You see this? 4.5, 4.75. It actually can wiggle around higher and lower. We're somewhere here. I don't know where exactly we are right now. But if we par here, if we get par, the market's not going to like it. The market's not going to like it. I'm just giving you guys and girls a heads up. Could turn out to be a massively fantastic buying opportunity. But we're going to get there. Look, man, I'm with you twice a day. Do you think that's going to escape me? No. That means it's not going to escape you either. All right, guys and girls, we're kind of out of here. I love all of you from the heart with all I got. Thank you for being here. Thank you for your support. Thank you for those thumbs up. Let's do something about that, people. Let's get the algorithms to see the video. The algorithms will see the video if there are thumbs up and if there's a lot of comments here. So just talk to each other. Greg, I really like what you're saying. Greg, I don't understand it. Greg, you're wrong. Tell me why I'm wrong. I don't know everything. I don't know everything by a long shot. I am playing the same game as you. A game of incomplete information. A game where all the pieces are constantly moving. It's not as easy as it seems. I'm telling you right now. So anyway, we got this, people. You understand? All right. I love you all. Again, thank you for being here. I will see you in the morning, people, as usual. With regard to that, until we meet again, what am I going to tell you? Take care of yourselves and take care of each other, all right? I'll see you later.